Okay, so a couple of weeks ago, I offered a special for the premium subscription to the SMT newsletter. I wanted, my goal always is to get people in at the beginning of a move, and that was why I offered that special because I thought we were at the very beginning of a potential trending move, and that move, of course, be in the stock market. I've noted this triangle pattern that was in play for a while now. The perma bears, of course, have been continue to try and call tops in the market. They've been doing it for years. They're going to continue to be wrong. They'll probably get bullish, somewhere around year 22 or 23 of this bull market, and they will have missed the entire thing. I've been warning people that this is not a topping pattern, that so many people, so many perma bears seem so fond of trying to uh, label this since 2018. This is not a topping pattern. This is a sideways consolidation in an ongoing secular bull market. Um, 2 days ago, we got a marginal breakout from this triangle in the tech sector, and tech is always going to lead a bull market because bull markets are driven by technological innovation. The last bull market was driven by the personal computer and the internet. This one, as I've gone over many times, has a multitude of drivers. But the NASDAQ broke out of this triangle marginally 2 days ago, back tested that breakout yesterday, again today, and we're starting to get some follow through to the upside. I don't know that we're going to just take off and fly. We've got two resistance zones we got to get through here, but one we're kind of pushing up against right now this morning, and then we've got another one here at the all-time highs. But this triangle pattern in the breakout would target something around 9,000. We've got roughly about an 1,100 point move from the bottom initiation of the triangle to the first pivot to form the trend lines, and if we get a similar move, that's going to target something in the neighborhood of 9,000. And I've been saying for a while now that I don't think it's completely out of the question that we could see 10,000 on the NASDAQ composite by the elections. I've kind of given up on the idea that we might retest this December low and produce a 4-year cycle low a little deeper in the normal timing band. Once the Fed started cutting rates, that became iffy. That scenario became iffy, and then now that they've started another round of QE, I think it's basically off the table for another retest of the December lows. And now we're breaking out of this triangle consolidation pattern with a target somewhere in the neighborhood of 9,000 over the next 3, 4, 5 months. I would say it's not going to be a straight up shot, obviously, but this at this point, I think you can, if you join the newsletter when I offered that discount, then you're already well into nice profits because I got you in, tried to get you in here. Now we're forming the breakout, but I don't think it's too late by any means. I think we've got another 1,000 point or so run over the next 4 or 5 months, and like I said, it may be even we could maybe even get to that 10,000 level by the elections of next year. And if you're playing this, even in an unleveraged, that's a pretty good return. If you're using some leverage, triple leverage funds, maybe on part of your positions, that's potential to produce some really nice gains next year. So we just keep keep on rolling here. We started the year with a huge gain in oil. We rode from right in here up to the $60 level. We did it in leverage. That was an 80% gain. Then we caught this move in the stock market as it came out of this intermediate cycle low. So we caught another pretty strong trending move. Of course, many people caught this move in the semis, which would have been a much bigger percentage move. And I suspect we're going to break out of the triangle in the semis today. And remember, this is like a 19-year basing pattern, so there's just no telling how far this is going to go over the next 10 or 15 years. And we're just now breaking out of this consolidation. And we also caught this move in the metals, got out pretty close to the top. Again, huge trending move. So we've had a year for the record books in the SMT, and I'm not going to offer a discount at the moment, but I do think we are getting close to potentially starting another trending move in the metals. We've been in this bull flag pattern here for about 7, almost 8 weeks now, and I'm starting to lose confidence that gold is going to drop down and make a lower low, simply because the dollar appears to have topped. Now, granted, the ECB is going to fight this and try and push the euro down and the dollar back up, but I don't think they're going to succeed. And I suspect at some point here we're going to see an explosive move in the gold market as well. And I've said this many times, that during the initial phase of inflation, which is what I think we are starting, everything tends to go up together. So this is not an either or setup. Stocks, if stocks go up, gold doesn't have to go down, and if gold goes up, stocks don't have to go down. They can go up together. And for most of the early part of the 2000 decade, that's exactly what happened. Everything went up together. And also, as we came out of the Great Recession in 2009, everything went up together. So I think there is potential brewing here in the metals market soon as well. A lot of potential basically everywhere in the market. The one area I'm not terribly interested in right now is oil. I think it's kind of stuck in a sideways pattern, but there is potential in at least 2 areas. The stock market, and I think soon in the gold market. I'm just kind of waiting for that explosive, impulsive move as confirmation that the move has begun. And maybe in the natural gas market, but natural gas is extremely hard to trade. It's very volatile. So we just keep rolling along here in these markets. So those of you that did take me up on that offer a couple weeks ago are already profiting nicely. Those of you that just keep listening to the perma bears, you just keep missing out.